Are you looking to improve your credit score quickly for free? This video is for you. Whether you're aiming to qualify for a mortgage, secure a lower interest rate on a loan, or simply enhance your financial health, raising your credit score within a short time frame is achievable with the right strategies. We are aware that most people that struggle with credit are already tight on money, and paying an expert or credit repair agencies seem impractical. We are here to reassure you that you do not need to pay someone or agencies big amounts of money to help you get back on track with your personal credit health. Keep watching. First things first, let's get some clarity on credit reporting and credit score lingo. What is a credit score? A credit score is a numerical representation of an individual's creditworthiness, indicating the likelihood that they will repay borrowed money responsibly. Credit scores help lenders decide if they should lend money to someone. Credit scores are typically generated by credit bureaus or credit reporting agencies using formulas that look at a person's credit history and how they handle money. So, what factors impact my credit score? Key components considered when calculating a credit score include 1. Payment history. This reflects whether the individual has made timely payments on credit accounts in the past. Late payments, delinquencies, and accounts in collections can negatively impact this aspect of the score. 2. Credit utilization. This refers to the amount of credit a person is currently using compared to their total available credit. High utilization rates may suggest financial strain and can lower a credit score. 3. Length of credit history. The length of time an individual has been using credit accounts, including the age of their oldest account and the average age of all their accounts. Longer credit histories generally reflect more experience managing credit responsibly. 4. Credit mix. This considers the different types of credit accounts a person has, such as credit cards, mortgages, auto loans, and student loans. A diverse mix of credit types may positively influence a credit score. 5. New credit. This factor takes into account recent credit inquiries and the number of recently opened credit accounts. Multiple recent inquiries or new accounts may suggest increased financial risk and could lower a credit score. Credit scores typically range from 300 to 850, with higher scores indicating better creditworthiness. While specific scoring models may vary, scores above 700 are generally considered good, while scores above 800 are considered excellent. Regularly monitoring your credit score and understanding the factors that influence it can help you maintain a healthy credit profile and make informed financial decisions. Now on to one of the biggest dilemmas about credit scores. Why are my credit scores different depending on the reporting agency, bank, or app? So which one is the most accurate? Well, whether you check your credit report or credit score from TransUnion, Equifax, and Experian or elsewhere such as your web or mobile banking app, most types of credit scores fall under two main scoring models, FICO and VantageScore. The differences between VantageScore versus FICO are relatively minor, in the sense that a person with a good FICO score is likely to have a good VantageScore as well. So, the most important thing you can do as a consumer is to monitor and control the credit factors. The methods we are about to share will help anyone improve their score regardless of the credit scoring model. Now that we got the terminology out of the way, here are 5 proven strategies to give your credit score an immediate boost. Step number 1. Rapid dispute resolution of errors on your credit report. Start by obtaining a free copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. Review your reports carefully to identify any errors or discrepancies that could be dragging down your score. Such inaccuracies include incorrect account balances, fraudulent accounts, or inaccurate personal information. Dispute these errors with the credit bureaus and provide any supporting documentation to expedite the resolution process. For your dispute letter to be effective, focus on facts and clear actions that you are requesting the credit agencies to perform. For instance, if you notice an account being incorrectly reported as past due, your dispute fact would be evidence for on-time payment, and the dispute resolution would be a correction to update the account as current. The more details you can provide to expedite your dispute, the better. Here is a couple other few tips to make your disputes effective. If you don't have any evidence to go along with your disputes for suspected inaccuracies, we still recommend sending dispute letters requesting the credit bureau companies to investigate and correct the information in question. To ensure your credit dispute is handled effectively, we recommend using certified mail for proof of delivery. This helps you keep records without giving up any rights. Credit bureaus must investigate and resolve disputes within 30 days under the Fair Credit Reporting Act. If they can't verify negative items, they must remove them. You can find a free dispute letter template in the comments to start your dispute process. Once the inaccuracies are corrected, your credit score should reflect any positive outcomes from such disputes. Fun fact, the Federal Trade Commission, FTC, reports that approximately 20% of consumers have errors on their credit reports. Correcting these errors can lead to a swift improvement in your credit score, depending on the nature and severity of the inaccuracies. Step 2. Rapid credit card balance reduction. Reducing your credit card balances can have an instant impact on your credit utilization ratio. Aim to bring your balances below 30% of your total credit limit, as this threshold is widely recognized as optimal for credit score improvement. For example, if you have a credit card with a $5,000 limit and a balance of $2,500, paying off $1,000 would bring your utilization ratio from 50% to 30%, potentially resulting in a significant score increase. According to FICO, consumers with the best credit scores tend to utilize less than 10% of their available credit. Every percentage point reduction in your credit utilization ratio can positively affect your credit score, with the most significant improvements often seen when utilization drops below 30%. Step 3. Request a credit limit increase. Contact your credit card issuer and request a credit limit increase. If approved, this action can instantly lower your credit utilization ratio, assuming your current balance remains the same. For example, if you have a credit card with a $5,000 limit and a $2,000 balance, a credit limit increase to $7,000 would lower your utilization ratio from 40% to 28.6%. Experian reports that consumers who received a credit limit increase saw an average credit score boost of around 10 to 20 points, primarily due to the improved credit utilization ratio. Step 4. Rapid resolution of delinquent accounts. If you have any accounts in delinquent status that are not part of your disputes, bringing such accounts current can provide an immediate boost to your credit score. It may be worth contacting the creditor and negotiating a payment arrangement or pay off the delinquent amount in full. Once the account status is updated to current, your score should reflect the positive change. For context, according to FICO, payment history accounts for approximately 35% of your credit score. Resolving delinquent accounts demonstrates responsible financial behavior and can lead to a quick score improvement. Step 5. Become an authorized user on a high-quality account ***. Ask a family member or friend with a strong credit history to add you as an authorized user on one of their credit accounts. Ensure the account has a low balance, a long history of on-time payments, and a high credit limit. Being associated with such an account can immediately bolster your credit score. Experian found that individuals who became authorized users on seasoned accounts experienced an average credit score increase of 30 to 50 points within 1 to 2 months. Nice. Not all credit journeys are equal, but we feel confident that by implementing these proven strategies, you can give your credit score an immediate boost and set yourself on the path to improved financial stability. Remember to monitor your credit report regularly and continue practicing responsible financial habits to maintain and further enhance your score over time. To watch more videos like this one, please consider subscribing to this channel. Your support means a lot in motivating us to make more useful content for managing personal finances and building a wealthy and fulfilling life. See you on the next video, and as always, take care.